Welcome back to TMarieInnovations channel. Go ahead and hit the subscribe button if you are new here, and if you're coming back, welcome back. You are definitely much appreciated. This video is all about credit ratings, credit scoring. We've all heard about my FICO credit scores. We've talked about Vantage scoring. We all know that car insurance companies have their own credit rating in order for you to receive whatever you pay on a monthly basis as far as car insurance. But did you know banks have their own credit rating? This helps out with not only giving you a loan, but this particular video is also going to help you determine who you should go through as far as a bank or even a credit union. This would help you when you have future goals as far as bank loans or credit union loans, something that has to do with your home mortgage or maybe even another car, refinancing, anything like that. So stick around on this video. So bank credit rating, it estimates how likely a bank is going to default, go out of business, or stay afloat within business. They have their own grading system. So investors ends up looking up bank ratings in order to do business with them. So you need to know exactly who you should do business with too. You also have banks that have something called junk ratings, which we will get into that further in this video. Junk ratings, you want to be able to stay away from those. So let's go ahead and discuss further what's going on. So you being a consumer, you already know about your personal credit rating. You already know how much that could take a toll on your life when you try to apply for credit cards, loans, investing, anything like that to that nature. So even with specific jobs, your careers, some companies, they also go based off your credit rating too. We need to understand that. But what if you decided to purchase a home? If you don't have all of the funds in order to purchase a home, you're most likely going to go to a bank. You're most likely going to go to a credit union. So you need to know what that particular bank or what that particular credit union actually goes by. We know that banks, when it comes down to their ratings, they look at third-party responses, they look at responsibility, they look at reliability, because they want to make sure that you pay that money back. So part of their rating is based off of your credit profile, just to see how consistent you are with your payments. That's why it is very important to always pay everything on time on a monthly basis. That goes against your credit profile, and if you are paying on time, most likely you're going to have a good rating when it comes down to a bank or a credit union. If you default or become late 30, 60, 90 days or even 120 days before it becomes a charge-off on your account or a collection, they're not going to offer anything. They're going to take you as a high risk. Those who use bank ratings are mostly private investors, regular investors, of course, consumers like you and I, government agencies, and other financial institutions use these. If you've never heard of them, Fitch Ratings is an agency that actually uses bank ratings in order to process any type of loans. You have a good rating with a bank, they're willing to approve you. So if you have something called like a AA or maybe even a AAA rating through a bank, you are considered one of those who would get a nice approval rating. If you have something called a BB or even a BBB, you are considered a risk, but not something who would, be considered a high risk as far as a C level, D level, or an F level. So having a AAA rating or even a AA rating, it doesn't guarantee a bank will go into default, but it just means that these particular agencies don't consider these particular banks or even that particular rating to likely go into default or go into foreclosure as a bank or even go out of business as a bank. There's also other ratings called non-investment grade rating, which is of course going to your junk rating. And those that are considered that means banks are considered trouble. Those type of banks are ones that are seen in the foreseeable future as going out of business, changing names, being bought out, things like that. You want to be able to know what rating your bank falls in. So S&P, if they rate that particular bank as a AAA, you have the lowest risk. Moody's is another investment company that also goes by ratings. They do the same thing, triple A's. Fitch is another one, triple A's. S&P is a triple A's. They have their ratings from triple A's, double A's, A's, BAA's, triple B's, BA's, double B's, single B's, C double A's, triple C's, CA's, single C's, D's, and double C's. Those who are considered CAAs, triple C's, CAs, double C's, and single C's or D's are ones that you are looking at substantial risk, high risk, low chance of recovery. Those who are about to go out of business, has defaulted on obligations, might continue to do business, but on the verge of going out of business. Credit ratings can also impact customers differently on what type of business that they may have that they do with the bank. Kind of like your CDs, kind of like your mutual funds that you would do. I know a lot of credit unions here in Iowa, they have CD offers, they got refinancing, they got car loans, anything like that. We want to be able to do business correctly. So on another scale, banks who are insured by what's known as the FDIC, you will not have to worry about a credit rating when it comes down to the bank because they are covered by insurance. So if they were to get robbed or if they were to go out of business, any money that you have stored within that particular bank or that credit union, your funds are safe. It's covered by insurance. So if that were to happen, you're able to freely move your funds and not have to go through the hassle of where's my money now that you have went out of business. Most banks will have $250,000 or higher in insurance, and this is just to protect those who do business with them. With a credit union, it's slightly different because you pay a specific amount. Like, for instance, if you have a savings account with a credit union, you pay maybe like $25 in order to open up that particular account. This makes you become a member and also part owner of that credit union if you did not know that. Again, you are considered part owner. You have a small percentage of ownership, but you are a member of that credit union. So any benefits that that credit union has, you as a member has first obligations to that particular loan or low interest rate or anything like that to that nature. That's your benefit that you are paying for in order for you to be a part of this particular establishment. So as long as your money is secured under the FDIC, and if your bank were to go under, if it were to close, if it wasn't protected, you are protected as the consumer. One question is, how am I able to look up my bank's rating? How do I know that they are low risk? How do I know that I am actually doing business with a good bank that I don't have to worry about? Well, one way to look it up is under the Federal Deposit Insurance Corporation, which is the FDIC, or you're able to look it up under the National Credit Union Administration if you go by credit unions. These two industries have all banks and credit unions listed under them, and you are able to view your rating under there so that you're able to do business. I can give examples of those that have great ratings, which Ally is one of the best banks overall, which has a great rating, which means low risk. Chase is good when it comes down to customer service. They have a great rating. One that's very surprising, but I think it's best when it comes down to those who are looking to open up a bank account for the first time, and that is Wells Fargo. Capital One is good when it comes down to millennials. USAA, great for military. Charles Schwab, international people. Capital One Spark Business, great for small businesses. There's a place called Simple. That particular bank is good for college kids. Those type of banks are categorized to a standard that have great ratings for those particular types of people. Now, what about regular consumers that's not part of those categories? Again, look up those two types of industries, check out your bank. check out your credit unions. Make sure that they have a great rating. I know with my credit union, and this is something that I didn't know when I first opened up the account, my particular credit union was bought out. So the regular credit union had a low rating. That's something I didn't know. And when I did further research, it was understandable as to why they were bought out, but they were bought out by a particular credit union that has a high rating. So now I have low risk as far as my credit union institution is going out of business or anything like that. They are considered low risk. So definitely look into that so that you know what your bank stands for. It also helps you as far as loans. It helps you as far as refinancing. It helps as far as investments. It helps as far as opening up a new bank account, savings, checking, debit cards, credit cards, anything like that you are able to get from a bank or a credit union. Make sure you look up that rating, because great ratings has great futures, great possibilities. Those with low ratings are considered junk, and you're going to end up looking at possible going out of business features. Those that are capable of continuing business, but they are more likely to go into default when it comes down to federal regulations. So please look into that, especially if you want to do future investments. Also make sure that you keep your personal credit up to par. So if you do need help with your personal credit, you can always count on TMarie Innovations. Check out my website, www.TMarieInnovations.com. The link will be in the description box below. We are able to help with your credit rating and your credit profile. Just let us do the work, and we will give you a system to where you're able to see how you are doing as far as credit monitoring is concerned. We do work with MyFICO, so you will have legit credit scoring and credit monitoring so that you know your best scores and the best chances of you receiving any type of investments, opportunities, or loans within the future. So I'm Trinisha Marie. I am the owner of TMarie Innovations, and of course, if you like this video, go ahead and hit the like button. Comment down below what you think as far as bank ratings, or any questions that you may have as far as bank ratings or credit union ratings goes. Make sure you subscribe, and if again you are coming back, welcome back. You are very much appreciated. Thank you for taking the time out to watch this. Have a great day.